Hi everyone, this is Mehul Mehta and welcome back to my YouTube channel. So today we have a very esteemed guest. He's none other than Ernest Chen. Dr. Ernest Chen is one of the most respectable figures in the quantitative finance and algorithmic trading community. He has written several books on algorithmic trading, which are also the best sellers on Amazon. So today, let me welcome Dr. Ernest Chen for today's podcast. And in this podcast, I'll ask a lot of basic questions which will help a lot of freshers and intermediaries. So do watch this podcast. So first of all, thank you, Dr. Chen, for giving your time and welcome to this podcast.
Thank you for inviting me, Mehul. It's my pleasure.
Yeah. So Dr. Chen, for people or for students who are not aware about algorithmic trading, how would you define algorithmic trading? What is algorithmic trading?
Well, algorithmic trading is basically you have a strategy that can be encoded in a program,
Mhm.
so that all the decisions are made are based on the rules that are in the program instead of having any sort of human discretion or intervention.
Okay, okay. So there's no manual trading, it's all done with computers. Is that right?
That is, yes, that is the purest form of algorithmic trading. Of course, sometimes traders may not be able to completely automate the execution. So when the computer say buy, you would actually have to go and submit the order yourself into your brokerage account. That can be also considered algorithmic trading because the decision part is actually made by the machine, but the actual execution, because maybe there's some software incompatibility issues, you have to enter by hand. But that's still considered algorithmic trading. Yes.
Okay, okay. So Dr. Chen, like what inspired you to get into the world of algorithmic trading and how did your journey begin?
Well, I mean, my first job is being a machine learning, in particular, language modeling research at IBM. Not so dissimilar to what OpenAI have been doing in all these years, but we did it with, of course, a few decades earlier, and the technology was not so advanced at that point. But we have been applying statistics to predictions and so forth, machine learning to predictions. So when many of my colleagues went on to a hedge fund called Renaissance Technologies at that time, I decided that maybe there's something we do that is relevant to a different arena as well, which is the finance. And so I also move on to a newly formed group at an AI lab essentially at Morgan Stanley, and that's really my first introduction to how um, AI, ML, and algorithmic trading can be a very exciting applications of mathematics and statistics and computer science.
Okay, okay. And then so you mentioned about your journey, so while you were at Morgan Stanley or while you were at IBM, so were there strategies or like did you started algorithmic trading or were you developing the setup involved in it?
Yes, at Morgan Stanley, one of our project is to develop algorithmic trading algorithm using AI. And but that's really a strategy. It's more almost like an internal consulting group. We propose this strategy to various trading desks and portfolio managers, whether they adopt it or not. We have no say in it. So it is only after we our some of our colleagues at Morgan Stanley move on to Credit Suisse proprietary trading desk that we actually get to trade our own algorithms. So we were really bona fide traders only when we are at Credit Suisse.
Okay, okay. And like, is it true? Is it a myth or is it the truth that you need to be a math genius or you need to be a good software developer to enter into algorithmic trading? Like, how true is that? Or like, what's your say on that?
I don't think so. I think that a lot of the successful traders do not have PhDs.
Mhm.
They don't even have a master's degree for most many of them. And But what they have is a keen understanding of the markets, and these a lot of this understanding come from uh, talking to people, to reading various business articles from actual trading and gaining the feedback from the market and so forth. So a lot of this experience cannot be, just taken from a course. No matter how many PhD you get, you may not get this knowledge. You have to practice. But once you have a good understanding of how the market works and what are the opportunities might be, there are a lot of these nuances that you need to learn. Once you have that, to automate the strategy and put together a algorithm and automate it is actually pretty mechanical, especially in this day and age of Copilot and generative AI. You can specify a strategy in English and you can get a piece of code out of it from ChatGPT, for example. And That's actually the easy part. So you do not need to be a math genius. In fact, a lot of math is used in most of the algorithms, and you do not need to be a super programmer because of the advent of generative AI. What you most need to do is to have a deep understanding of the market and you can't, and various nuances of it.
Okay, okay. And like, how does a day of a algorithmic trader looks like in any financial institution? Is it like researching about stocks, or is it like writing bunch of programming, or is it like doing back testing on a strategy? So like, or is it something else?
Well, I would say all of the above. A quant researcher who is in charge of generating alpha, read papers, improve the strategy, create new strategy, write code to back test the strategies, write codes to assess the risk, simulations, or maybe even, but in some instances, write the execution code to trade it. So it is, depending on the scale of the organization, you might do all of this, or you might do just one part of it.
Okay, okay. And also, Dr. Chen, with the rise of machine learning and neural networks, what's your say on that? Can we use machine learning, or can we use neural networks to generate alpha, or to generate signals for that matter?
Well, yes, some people have been able to do so, but I would say that at this stage, most of the alpha is generated by human conceptualization or human understanding, and you know, it is. I have found so far that it is very hard to have the machine generate a good idea that we haven't thought of, because most of the ideas that machine generate are what they read on the internet. You have to
Okay,
remember. So
okay,
there's not much new in there. I have not, maybe it will happen in a year, 2 years, 5 years. But At this point in time, I would say most trading strategies are, conceptualized by human and then maybe refined by large language model and so forth. Now, there are, of course, pure machine learning algorithms that, are basically based on machine learning. There's no causal models in it. It's essentially a data mining exercise. You feed it 1,000 different sort of data and say, well, predict the market. I have generally found that approach has been less than amazing. Although, again, maybe somebody have made it work, and obviously they're not going to tell me that it worked. But From whatever public materials or conferences or conversations that we have so far, it is not a very widespread success in using a pure machine learning approach to trading.
okay. And also, Dr. Chen, has there been any instances when machine learning, like from your journey, wherein machine learning or any kind of, this AI systems helped you generate something, before the market predicted it? Has there been any instance like that?
No, as I wrote in my recent book, Generative AI in Trading and Asset Management, um, just 1 year ago, you can feed a document with an exact specification of a strategy into ChatGPT and they wouldn't be able to understand it. And that is, 1 year ago. Now they understand it. So I feed it in and they can spit out some code. So obviously they have some major improvements. But I don't know that they can come up with a strategy that is completely novel on its own.
Okay.
Yes. So yeah.
Okay, and also like, there are a lot of students in general and professionals who want to learn algorithmic trading. So let's say, you have started your career again. What resources would you use or would you advise students to use, to start into algorithmic trading? Because it's a big journey altogether. And the resources, I mean, there are a lot of resources out there. So, it becomes confusing to like which one to refer. So like what would you advise students, which resources or which books someone can refer for algorithmic trading?
Well, I mean, of course, I would recommend my books as I started, particularly quantitative trading. But even with the help of generative AI, you need to have some basic concepts of how the markets work. And you have to read books before you even can make sense of whether a strategy that is proposed to you by AI make any sense at all. But once you have that knowledge, in terms of the specific details, like, oh, how do I trade forex pairs? Oh, how do I trade options on futures? And that kind of detailed analysis, uh, Gen AI can help a lot because you can, basically you can ask it to explain these nuances to you once you have the overall concept of the market, of the sort of trading opportunities and so forth. So yeah, I would say that read my books, read other authors' books, get a high level concept, and then drill down on a particular strategy or particular market, whether it's mean inversion, momentum, or high frequency or low frequency, or stocks or bonds or futures. Drill down on one particular corner that you feel you understand particularly well, and then use Gen AI to help you fill in the nuances and the knowledge and produce backtest codes and so forth. I would say that is in this day and age the way to go.
Okay, okay. Thank you, Dr. Chen. Also, a lot of students, what they try to do is, they try to build in complex strategies and they think, let me build some complex strategies so that I can generate alpha or I can generate some kind of signals. So would you advise someone who's just starting this journey, as you mentioned, momentum strategy, mean reversion strategy, would you advise someone to start from this or would you advise, go use like complex strategies and I mean what would you advise, like what's the
Well,
best?
complexity is not something that one should aim for in the beginning, but it will act naturally come out of it after a few years.
Okay, okay,
So, typically a strategy that works has some kind of a causal explanation. You say, oh, because of this and that, therefore the market behaved that way. It is seldom the case that just you just randomly observe something and some price dislocation and that it will endure because you might seen this dislocation in the past. How do you know it's going to continue in the future? So oftentimes we want to have some intuition of why this works, some causal explanation, and then build the most simple strategy to see if it has some alpha. Okay. And now, typically in the first pass, the Sharpe ratio won't be high. Maybe it's just slightly above the risk-free rate. And then you would then try to, oh, maybe what's the time that it lose money? You might have a way to improve that by risk management or by uh, uh, parameter optimization or by uh, using AI to look at the regimes and so forth. So there are many things that you can do to improve a basic strategy, but you do not start with a complicated strategy to improve it. You start with a simple strategy to improve it. At the end of the day, you might get a very complex set of rules, but that is not the starting point.
okay, Okay. And also, Dr. Chen, like, how does the setup of a algorithm trading look like? Is it like bunch of I mean, is it like you require a lot of computing, or is it like how does the overall setup looks like for algorithmic trading?
I don't believe that you would need a lot of computation if you start with simple strategies.
Okay.
I have never find that a PC would be insufficient for testing most of the strategies. Um, you're not trying to train a large language model on with several hundred billions of parameters. So the most rudimentary computing resource is quite sufficient for most of our
Okay.
application.
Okay. And like, so I have few more questions, Dr. Chen. Was there any instance in your life where you felt algorithmic trading worked for you, and let's say, something which you didn't think of happened with the algorithmic trading?
Um, I would say that well, I have not really traded any other way, so I don't know how one can compare algorithmic trading with other ways of trading because maybe you could say that well the other way of trading is really buy and hold. You buy an index or some stock and hold for the long term. Well, in those cases, there's it's really just a bet on the general economic growth. And you have it's a very passive investing in the sense that hey, I bet on the let's say the U.S. large cap is going to have the best growth. Why? Why? Oh, I don't know. I'm not the economist, but it seems that that's uh, uh, the most common way of investing in the U.S. market is to buy a large cap index, and and because everybody's doing it, it seems to be doing well. This strategy, that's what you do. But that kind of investing, it works for long term, but it's not a way to generate income because they are drawdown. So if you're treating, the algorithmic trading as a way to generate income, uh, it's a completely different mentality for investing in the long term. So investing long term, you don't need to think very much about it. Just do whatever what other people are doing. For algorithmic trading, you have to be doing something quite differently because you want to have a uh, positive return at least every year, if not every month.
Okay. Also, Dr. Chan, like I've seen a lot of students these days, quitting their jobs and trying to do algorithmic trading. I've spoken to few students, this year that so when I spoke to them, they mentioned that they have quit their job just to work on their algorithmic trading setup. Would you recommend this, uh, or would you recommend students to, first build the strategy, see that for few years or few months at least? Like what would be your
Well,
recommendation?
I definitely don't recommend, the first principle of trading, not just algorithmic trading, is risk management.
Okay.
And quitting your job is a big risk, and that is you immediately violate the first rule of of algorithmic trading. So you should stop right there. So I would say that you should stop before you even start. Um, and there's no reason also that you cannot do algorithmic trading, as a part-time job. After you get home from work, you can work on your back testing. You can work on it on a weekend, and you can write a program that automate execution. You don't have to be sitting in front of a desk to execute. If your algorithmic trading strategy is any good, you should be completely automated. So you should keep your part-time, full-time job, and just the robot should execute on its own. So it's quite a contradictory to say that well I have to quit my job in order to be a full-time algorithmic trader. The two are a contradiction. First, you violate the first rule of algorithmic trading, which is risk management. Secondly, you violate the second rule of algorithmic trading, which is automation. So absolutely do not quit your job, is my advice.
Okay. Okay. Thank you, Dr. Chen. Also, are there any myths or any misconception around algorithmic trading that you have ever heard, or that you hear from students asking you?
Well, I think the biggest miss is that you have to be a math genius or programming whiz to do it. No, and anybody can do it. You don't even need a college degree to be a algorithmic trader in this day and age. All you need to know is to understand the market, and to do that, you have to read, you have to talk to people, you have to trade. Most importantly, to trade yourself.
Okay, okay.
And even if it's paper trading, but of course, it's better if it's a real money. But even if it's paper trading, it's better than nothing.
Okay, okay. Also, Dr. Chen, I have last two questions. So, I saw your book, Algorithmic Trading, and how you can make a business out of, like, how you can set up a business on algorithmic trading. So, can you give a brief about the book, or can you give someone who wants to start a business on algorithmic trading, like, what would, like, just, a 2 minute talk or something like that, which can help the viewers to understand if someone is trying to build a business around algorithmic trading.
To build a business, really, you have to have a successful personal trading track record. So, we have been talking about how to find a strategy, how to execute, and so forth. That's all the first steps. Now, if you have a good track record, then the next step is to find someone to invest in your track. You can manage it for your friends and family or external investor. Once you have a strong track record, it's actually not that difficult to find someone who want to pay for it.
Okay,
There are
okay,
many ways, public and private, that allow you to do that in this day and age. Many brokers invite you to do so, but that's all assuming that you have a strong personal track record.
okay, okay. So, any last advice, Dr. Chen, to the students or to professionals who want to enter into algorithmic trading?
Well, I think the big advice is that one has to be patient and be and be conscious of risk.
Okay, okay. So, thank you, Dr. Chen, for joining in today. It was lovely speaking to you. Got a lot to know. I've seen a lot of your podcasts, to be honest, on YouTube. I've seen it, and that's why I reached out to you on LinkedIn. But thank you so much for joining in.
Thank you for inviting me. It's been my pleasure. Take
Thank
care.